Like yesterday reported its numbers in a weak set at that. Mihir Jhaveri, VP Institutional Research at Religare Capital Markets, is here to discuss the cement industry with us. Mihir, let's start off first with your take on Ultratech Cement's numbers first off.
I think the numbers were pretty much in line. At the margins came in as per our expectations. EBITDA was also largely in line, a marginal drop. PAT came in lower than expectation largely because of the increase in surcharge on tax, and so higher taxation has largely resulted in the number being lower. Having said that, I think so the numbers were pretty much in line. Going forward, probably because of the price correction, you might see some leg down in terms of numbers which would come in the coming quarters.
Okay. What's the sense? I mean, there are various quarters suggesting that prices could start falling from the month of May. Is that something that you're looking at, and what could be the implications of that?
Yeah, so prices have already started falling. I think some pockets prices have started falling as early as April, and which is a bit alarming because there is feeble demand which is going to be there. So I think the impact will be there in the coming quarters through the saving grace, being that the fuel cost is also going down. So that may be a little bit of an advantage, compensate for the price drops which will come in. But having said that, what we believe is that this will be a second half recovery which will be there in cement, and you will see the volume growth and the price pick up only in the second half where the base is lower. So the coming quarters are going to be a little bit challenging.
Okay. To what quantum are you expecting price cuts to be taken? I mean, in April there were hikes of 5 to 10 rupees per kg, and that was rolled back because the demand did not support the kind of price hikes that were taken. And ahead of monsoons, what quantum of price cuts are you anticipating?
Yeah, so I think April there was no price hike as such. There has been a drop of 15 to 20 rupees a bag in pockets like the western market, southern market and the eastern market. And it's difficult to say how much will be the quantum, but generally the move is very swift, and both on the downside and the upside. So you might see a 50, 60, 70 rupees drop across regions in terms of per bag basis in the coming months.
What's the kind of demand scenario that you're factoring in right now? I mean, obviously Jan to March is predominantly a key season for them. You see activity picking up, and ahead of monsoons it sort of dips out. But what's the demand situation like? If you have to probably take a geography-wise picture, so southern region, western region as well.
So I think our overall demand growth is 6 to 7% for this year. Like I said, it will be pretty much back-ended where the base starts coming favorable from August, September onwards. Till then probably you might not see that growth. So first half will be a pretty muted growth where you may see sub 3% growth or so, 4%, but then the second half should be much better. Having said that, some of the pockets which should do well is the western market, and the northern market should do well. Southern market is typically scenario where you might not see much of a growth coming in unless and until probably Andhra gets resolved. So if some issue related to Telangana gets resolved and things starts moving there swiftly, but with the run up to the elections there might be some pickup in Andhra, but at the later half of the year. So our call is that pretty much the volume growth will be back ended, and it will be in the second half rather than the first half.
Okay. What about realizations for the other companies as well this quarter for quarter 4? Is that expected to dip for the rest of the industry?
Yeah, so for a sequential basis, I think you will see a marginal uptick in terms of pan-India players. That's what we have been building in. And some of the pockets there has been decline. So a southern player will see a decline of 2 to 3%, a northern player will decline of 1%, whereas a pan-India player will see an uptick of closer to 1 to 1.5%. So that will be the trend for this quarter's results going forward into most of the companies which are going to report.
Okay. For Ambuja and ACC in particular?
Yes, so Abuja and ACC will have, our expectation is somewhere around 1.5% increase in terms of realization on a sequential basis. So we have seen Ultratech had a marginal uptick, so we might see a lower than the numbers which we have been building in for Ambuja and ACC as well.
Newspaper articles this morning suggesting that Ultratech may close out the deal to buy out JP's cement plants by the end of May itself. How does this fit in for both the companies?
I think we've been hearing this since quite some time now. There has been on and off things. Media has been reporting this, that it will be done. So we'll really wait and watch whether it happens or not. But if it happens, I think somewhere around $150 per ton should be a win-win situation for both Ultratech as well as JP Associate. In fact, JP Associate is in need of to reduce their debt significantly. So any deal which will be done will be positive for JP Associate. So and any level lower than $150 will be also positive for Ultratech. So, but we'll be wait and watch. I think there has been a lot of talks, but let's see when the final deal comes out.
Just one last word with regards to the mid-cap cement space and the valuations that are trading out there.
So basically, we like top picks Ashri Cement and JK Lakshmi Cement, and their valuations, they must be trading closer to 4 times EV by EBITDA, 4.5 times EV by EBITDA. JK Lakshmi will be trading even lower than that. So we find those stocks quite attractive. I think the regional mix is pretty good, and the presence in the market, which is a high growth market near to Gujarat as well as Rajasthan and Delhi, plus with sub-capacity expansion of both these companies, they remain to be our top picks in the mid-cap space. With regards to other players like Southern market, clearly valuations are attractive, but having said that, they are in a market where the oversupply is going to be there for some more time. So really don't like south-based players at this point of time.
Got it. Mihir, thanks very much for joining and really appreciate the time there. Mihir Jhaveri with his views.
Thanks.
Let's take a quick look at the BSE Sensex futures.